Hey, what's going on, guys? This is TerrenceRe, and I got another stock market update for you guys. Today, it's kind of like a weekend video, getting you ready for the week. I'm going to be going over the expected moves. Uh, we're going to look at the option chain, and then to kind of get a intraday feel for what we got going on through the week. Let's get started. Right now, I got the SPX, which is the index of the S&P 500 up right here. So basically for the week, all I'm doing is looking at basically for the week ending course on Friday, which would be I'm looking at the option chain. So we got February 10th, which is 5 days. This is a Sunday video. So you see it says 72.22. So for the week, now in order to use these expected moves, I'm gonna click on this, open up this option chain, and you can see right here. Now, if you were to look at another platform, you would probably get the expected move should be similar, but it may be off by a few bucks. That's because TastyWorks has their own way of coming up with theirs, and it's $72.22 for the week. Generally, I look for big moves in the market when I see the expected move above 100 and above. Then I'm expecting the market to be rocking and rolling that week. That doesn't mean that we can't get something. Of course, any type of geopolitical risk, like what we got going on between the United States and China, if that was to ratchet it up, that of course that could make that expand. But as it sits right now, this is what we have. So this could kind of give you targets intraday for trading, right? So if you were trading or doing some maybe some intraday trading, some scalping, or just some weekly trading instead of like far out, you would want to be conscious of these expected moves. You see, I already have it up on the chart. So the market closed at 41.3648, and all I did was go plus. So basically, what you're looking at on the screen is this is that ruler right here on the chart, so you can see it. I put this red line and this green line here. So obviously, you see that this green line is coinciding with this gap. Let me take that off the screen. I'm just clicking that. So now you see this right here, this rectangle that I drew all the way across from this gap. Now this gap is dating all the way back to August 19th. And you can see the market respected that resistance right there. So on Thursday, we had this green day, and then it pulled back, and we got this sort of like this doji candle on Friday. So the expected move for this week is right there. It's not expected to go too far here and then down. So there are a lot of different things you could do with that. Now let's break it down. Let's go to a 30-minute chart, and let's take a look at like how things are shaping up on the 30-minute. Now, if we would, if I was just marking this up, now you see this trend line, this is drawn like on the weekly that I had earlier. So there are a lot of things that I'm going to go ahead and remove that for the sake of this video. Let's see. We remove this drawing, take that off. So what we got going on right here, let's draw a trend line from the bottom here, from this low. Let's come up here. So I would be looking, you probably are going to get, let's draw another trend line. Let's do something like so. So you can see, if I was trading this, right, I got a high, a low, and then I got a lower low. So it looks like the overall market is going to trend lower. So, if I was coming in here this week doing some intraday trading, I would probably be looking to take profit right down here where it runs into this trend line. Maybe short. If you got short somewhere in here, you want to be taking profit right around here, or at the very most right here around the expected move. If you look at the option chain, we're gonna see a lot of open interest, probably somewhere around. You see right here at 4,200, you got a lot of open interest right here. some volume this came in on Friday. So people basically came in. If I had to bet, now you don't know whether these are whether they bought these calls or sold them, but I'm willing to bet that they sold them. I'm willing to bet that they sold at 4,200. And you see 4,200 is right here. You see the expected move is right here. That's probably some solid resistance. So, you know, shorten the market just asking my overall, just from looking at what I'm looking at, might be a down week. Just looking at that. And I use expected moves like that all the time to kind of gauge what I'm going to plan for the week. I did do. Now, when the market closed on Friday, here are the top equities that were going through the TastyWorks platform. And you can see them right here. I did do expected moves for the top three: Tesla, Apple, and Amazon. So right now we're going to take a look at Tesla. I already got it pulled up. If we take a look at Tesla, we have Tesla has let's go to the option chain. So for the week, Tesla has a plus or minus $14.72. That's a lot for a week. Tesla basically giving you your more bang for your buck. If I'm not telling anybody to day trade, but if you're going to day trade, this is what you want to day trade. You want volatility, you want movement. I mean, for the week, a $14 move, that's pretty doggone. That's a lot. And if I click on the option chain, you can see where the lows at, right around 175, high right around 205 on the option chain. A lot of different type of trades you can do. Just option wise, even if you want to day trade just buying and shorting shares, or you can come out here and do something like, I don't know, sell the expected move. Sell that. And maybe sell the 205. Hold on, let's see. You can take in $5.35 in premium, $535. And you can see just by taking that in, the green part is all, profit. Where it goes red is where you lose money. You can look at it like that, like so, or I can go to the curve view on the platform. I click curve, and now we can look at it on here so you can see it. Remember the dotted lines or one standard deviation. So you actually, by selling this put and selling this call, your profit margin is actually outside of one standard deviation move for Tesla. Now, Tesla is volatile. So for it to go outside of a one standard or one sigma move would not be a stretch for this particular product. Clear this out. We'll go back and take a look at the chart. And we'll look at how it looks at. Do we see any support on this chart? Let's look. Charting, you always want to look left, and what do you see? You see right here where the market came down, made these lows, then took them out. That's where we at, right? So you see, this is some resistance right here. I don't know if I said support before, but resistance. If you're looking right here, you see that resistance right here. So again, we looked at the SPX, and not to mention, if you look up here on my screen, you see this red right here. That's letting us know on the RSI, Tesla on the daily is overbought. Tesla is overbought on the daily. So we want to keep that in mind going into the week. You can see, if you look at this bottom of the screen, see the volumes picking up on Tesla as it came out of this hole. Now, looking at the S&P 500, looking at Tesla, setting up for a bearish move for the week. And it don't have to be a big move. But once again, if you're just looking to, scalp some stuff for this week, this ain't a bad week to do it. Let's take a look at the intraday chart on Tesla. Go to the 30-minute. And we can see we got highs, got a high, got a high, got a high. Come down here, look at the MACD. The MACD is making lower highs. So that's just showing us on the momentum oscillator that we're losing momentum as price action is continuing to go up. So anytime we see something like that, right, we got that right there. And then if we was to come down here, you can see we got this like so. Now, so the chart is, telling us that, hey, we may get something. It could come down here, once again, if I were to get short Tesla for the week, I would be taking profit somewhere right around in here, guys. I wouldn't, that doesn't mean that you can't get a move outside of this. You can, but I would be taking profit right around in here. I wouldn't be greedy and try to get, oh, it's going to keep going down. It can, but these ranges is where I would be looking. If I was bullish, I'd be trying to take profit up here. I would extend this trend line out, and you can see this trend line running right into it. So if you would, whatever you hit first, if the market was to open up Monday and hit right here, I'd be coming out wherever that trend line, and you can see it's kind of going right to where the expected move is. Let's take a look at Apple. Apple, let's look on the daily. Now, Apple doesn't have a real large move set up. So if we go to the option tab, just say 439, like as compared to Tesla, is not as volatile. $4 is still $4. If you bought 100 shares, that's a $400 come up if you would get here. Now, it ended on a big green candle. And if we look down here at the MACD on the daily, it's still climbing. You can see it was climbing on Friday. Now, RSI is overbought. So you got to take it with a grain of salt. Looking at, the chart over here doesn't look, I don't have the setup that I would like to see on it to go short. Just because we still had highs right here on the actual moving averages down here on the MACD. Now, the histogram started to make lower highs. I don't know if I would be ready to short on Apple if I was trading it. Let's take a look at Amazon. We'll look at Amazon. All right. So Amazon actually was down on Friday, down like 8%. And you can see you got a long wick, right? And then it actually closed with a red candle. So the histogram is already decelerating. So this one may be more of a short than Apple would be if I were going to. But once again, it's not a big move. Let's look. So it's $4.15, right? You got a right around $99 and 108, could call it. Let's take a look at the intraday chart. Not the hour. Let's look at the 30-minute. You may say sometimes I look at the 30-minute or the hourly, but mostly I'd rather look at the 30-minute only because the stock market opens at 9:30, right? That's the only reason. If it opened at 9, I would probably be looking at the 9 o'clock. See, you got a low, high, lower, low, and you can see it drifting down, right? These two little candles here. So you can see on the it is completely rolled over on the MACD. I probably would stay away from this one. I'm not quite sure what to call it. You could do something because you got this big gap right here. And I'm willing to bet at some point that gap going to get filled, but it may not get filled before this low hit, right? Either way, and you can see if you look left, you can see this is going to be some support right here. It's amazing how these expected moves line up with support levels. No matter what, if you shorten Amazon and you're doing some intraday trading, I'd be taking profits here, right? I'd be taking profits here. Either way, if you shorten, stop loss got to be somewhere right around in here. Because I probably wouldn't even be trading this with a stop loss, and I'll go ahead and tell you why. I know that sounds crazy, but of course This the expected move. So if you were using a stop loss, you got to at least be past the expected move. Like this is expected. So any range within here is normal for it to bounce around in here for the week. So if you come out here Monday and you jump right in the short and you expect and you got a stop loss at 106 and you get hit, and then you go to crying about the market makers and yada yada yada. Remember that your stop loss is within the expected move. That means the average range. This is it. So it's not a big deal for them to hit either one of these range. It could come Monday. It could actually gap up, tag this, and then come down and hit this on Tuesday. And you may hear traders talking about the market maker knew my stop. No, your stop is inside the expected move. That's why it's called expected, because they're expecting a $4 range for the week. So if you're doing any type of intraday or day trading, you gotta expect that you're gonna see some type of pressure if you have stop losses anywhere within here. That's why I'm not a real big proponent of stop losses. Really, like when I do some type of intraday trading, I have targets, and I know when I'm right and I know when I'm wrong, right? So if I got if it comes back and it takes out my A in the move or the one, which I talk about some more, when I'm doing like Elliott Wave, and it takes out that, then I know I'm wrong. And I'm not doing it based on anything else. But to come in here and short Amazon on Monday or Tuesday or whatever, whenever you decide to do it, and you on a 1 minute chart. So you in here on 1 minute, and I'll show you what I'm talking about. You come in here and you're on a 1 minute chart, right? Look at this. So some people will come in here and they'll get long right here on the pullback. And you put your stop right here. Okay. You expect now, and the market comes down and tags it, right? Takes you out of the trade and then goes up and then you have people saying, well, the market makers is looking at this. No, they're not. You trading within the expected range. You're inside of the expected range for the week. So that means that anytime this week, Amazon is expected to bounce around here. So if you got a stop loss at 102, so you're getting long and you got a stop loss at 102, 102, right? Now, I'll show you something else. I'm going to come over here to implied volatility and put touch percentage. The probability of touch for the week of it touching 102 is 84%. So you get long and you buy. You got an 84% chance of getting stopped out because the market could bounce around and just take you out. Why would you do that? Why would you put your stop loss there? Your stop loss has to be below this mark, right? If you got a 52% chance of it hitting 100, you got to at least be below 50%. I would say right around 99, right? Or further. That gives you 39%. At least you're below. So now you got the percentages. You're putting the math on your side. I would behoove anyone to open up an account with TastyWorks. I got a link down in the bottom in the show notes. You want to open up. Now, you can do this same thing with TastyWorks. I think Thinkorswim. But those are the only two that I know of. You may be able to do it on Interactive Brokers. I'm not sure. I don't use that platform. But TastyWorks, to me, is the best and the easiest with just one click and doing all of this. But if you understand and you can't beat math, I don't care how good your technical analysis is. Now, I use technical analysis a lot, but I couple it with these numbers too to make it make sense. So that's one of the ways that I use expected move. If it's some more stocks that you guys want to see and that you're trading, maybe later on, maybe next weekend, I'll do a little bit more and I'll add on to this. I do AMC and I do some more of the popular stocks, but they have to be liquid. So that way you can use the option chain, and the more liquid the stock is, the more accurate the more accuracy you'll have with the expected moves. Now, that doesn't mean that you can't go outside of here. Like I said, once again, that's just what is expected. So hey guys, I hope you got something out of the video. Hit the like button, hit the subscribe. Let me know what you think. Drop a stock you'd like to see me do this on. I could always update this tomorrow, let you know what those ranges are for the stocks that you own. And I don't have to do the week. We can come out and do monthlies. We can do. It's generally going to be more accurate within, I would say right around 30 days, 30 to 45 days, somewhere right around in there. I wouldn't go past like 40 days for this, like that next month out. Could possibly do maybe 9. I would stay less than 90, I would say. Only because the further you go out, the less, once you get past, I would say 90 days, it's going to get a little bit less accurate. But the more you have, the more liquidity you have in the stock, the more accurate it's going to be. Like Tesla, I want to say, is the top traded options equity anyway. I know it's more people trade Tesla options than any other equity currently. And then the SPY may be the, out of everything, maybe. So if you're looking at stock, so on Friday, the SPY traded 94.7 million. Right, that's stock. Look at Tesla, 233 million. Everybody's trading Tesla. So it's liquid. Meaning if you buy it at one price right now, you can sell it. You can turn around and sell it. It's liquid. You can get right out of it. Right? Options and stock. It's the ultimate trading vehicle. But with moves like this, $14 moves, you gotta trade small or trade let's see, proportionate to your account. Like you're sitting around in here, you got $25,000. You got to be careful with Tesla. It'll cut your it'll count your account total down real quick. So just be careful with especially trading shares. Options, you can do a little bit more manipulating with it, right? You can sell calls. You can come out here and you can do a lot with options, and it not more just that strangle right there, right outside of one standard deviation. So your only buying power is using this 7,500. See what I'm saying? And you can still you can move around. You can roll up, roll down. You just gotta watch it because it moves really, really fast. So hey guys, hope you got something out of the video. Hit the like button, hit the subscribe button, share the video, and comment in the comment section what you think about it. I'm out. Peace.